Hi, welcome to Forex In Four. I'm Mike Conlon for FXEDU, and in the next 4 minutes, I'm going to show you the highlights of where the action is in today's Forex market. So let's get started.
Good morning. Today's Thursday, June 9th, 2011. This morning I'm talking about decisions, and by that I'm referring to both the rate policy decisions coming out of the UK and the Bank of England this morning, and out of the ECB and the Eurozone as well. So what we're looking at now is I'm looking at a chart of cable here, pound dollar, all right, and the UK interest rate decision came out. You can see right here, all right, just at 7 a.m. Eastern time, all right, and the Bank of England did as expected, all right. They left rates unchanged at 0.5%, and they left their asset purchase also unchanged at 200 billion. So it's there's no real change going on out of there that would make the market feel any differently about it. Now, one of the things we need to note about this B of E rate decision is that they do not issue an accompanying statement with it. So it just, here's what the decision is, that's it, and then we have to wait for the meeting minutes to come out in 2 weeks to see if everybody else was, if they were thinking about doing something different, or if sentiment was changing amongst policymakers. So that's sort of what happened with the pound so far this morning. All right, just want to look at the Eurozone. Whoops, that's pound Aussie. Nope, there it is. Eurozone. Okay, we're back up above 146 here. Now their interest rate decision's coming out in about 15 minutes, and they're not expected to change rates this time around either. However, bets are increasing that they may intend to do so next month. Now, this is interesting because we all know about the story in Greece and Portugal and Ireland and these countries that have these debt problems. Well, a lot of people would say, hey, you can't raise interest rates into a economy that's seemingly starting to fail. Okay, and does that sound familiar? That's sort of the U.S. mantra. But the ECB may say, hey, you know what? Instead of monetary policy being an accomplice in this whole mess, kind of like how the Fed works here in the U.S., when politicians can't get their act together, the Fed has to sort of smooth things over. Okay, the ECB may actually do the opposite and force these guys' hands and say, listen, I'm raising rates, you better figure it out. And maybe that's what we need Bernanke to do here in the U.S. Instead of saying, oh man, the politicians, they're not going to do anything about the debt, so I can't raise interest rates, so I'm just going to let this inflation go and allow food prices and energy prices to rise, okay, because these guys can't get it figured out. All right, maybe he should be saying, you know what, we're raising rates. Guess what, pal? You guys got to figure it out and do it. So, we'll see what happens here in the ECB, but it appears that the ECB is out in front, and they're actually leading, the charge towards global health and responsibility, unlike the Fed here in the U.S. So, that's what's happened there. I just want to show you the Kiwi. Let's go back to the 30-minute chart here, if I can do so. I'm going to go back to the 30-minute chart on Kiwi dollar. Okay, and we'll see here that, boom, Kiwi boosts higher, all right, right up to about 82.60 area. Okay, this was on their interest rate decision, which came out last night. All right, they left rates unchanged at 2.5%. However, Fed RBNZ Governor Ballard, he actually issued some hawkish statements with it, saying that, the fallout from the, confidence from the earthquake wasn't as bad as expected, and that they're going to actually grow. So there's expectations here that New Zealand could be the next to raise rates out of all of these countries. Now, we're going to look at the Aussie by contrast. Okay, you can see here. Let's look at Aussie versus the Kiwi. Okay, you can see that that's notably down, okay, and selling off lower. We'll just look at Aussie dollar. That's also down despite a little bit of risk-taking this morning. All right, you can see this nice big fat candle here. All right, that was the Aussie employment report. Came out earlier this morning. Showed they only added 7.8 thousand jobs, 7,800 jobs versus an expected 25,000 jobs, although the unemployment rate stayed steady at 4.9%. So that's pretty good. But, you got to remember that things are probably cooling off in Australia. They're slowing down. All right, they have an interest rate of 4.75% right now. So chances are they're not going to be raising anytime soon, especially going into this global economic decline a little bit. So you can see why Aussie's just sold off a little bit here. We're back to just under this 106 area, which had previously served as support. Perhaps now this is going to be resistance here. All right, just lastly, let's look at dollar yen real quick. Dollar yen, wow, look at that nice fat candle on the 30-minute chart there, shooting star. Basically what's going on in Japan is that their GDP report came out, okay, and it came out worse than expected. And it was really hard to peg this number because we know about the problems that happened as a result of the tsunami, the earthquake, the nuclear crisis, but they were expecting to show a decline of 3%, okay, and they actually got a decline of 3.5%. So, that's a situation where we knew it was going to be pretty bad, but how bad and to what the extent was really difficult to tell, because at the end of the day, it's such a unique situation that occurred there. So you can see that the Japanese yen is a little bit weaker across the board, and the expectation is that hopefully the Bank of Japan is going to step in here at some point and perhaps make monetary policy more accommodative to try and stoke the economy here. So here's this 80 level. You can see we were trading under it yesterday. Okay, and we're gonna looks like we're gonna be on either side of 80 versus USD for the next short while here. All right, and then later this morning we've got the U.S. initial jobless claims. Again, we're expecting another 420,000 jobs to be lost. So we're gonna have to see what happens there. But this number, unfortunately, it's become a sideshow, and it's no longer carries the importance that it used to. All right, but we want to start to see the direction moving towards fewer and fewer initial jobless claims. If we start going the other way, then this could be a big problem. So, right now, we're going to wait and see what happens with the ECB here in about 10 minutes. But my expectation is that they're out in the forefront. Okay, they're trying to lead the charge. They're trying to bring the global economy back to reality. Okay, and get back to a little bit of fiscal and financial health. And if they're forcing their government's hand to do so, then hey, that's to be applauded. All right, unlike here in the U.S. where you talk about the enabler. We talk about drug addicts here in this country where there's usually some sort of enabler, all right, who allows these people to operate in the manner that they wish to do, and it's either by giving them money or whatever the case may be. But if you think about the analogy, all right, that's essentially what the Fed does here for the U.S. government. All right, it rewards their bad behavior. It allows them to continue acting the way that they do, okay, for fear that something bad's going to happen. Well, sometimes you got to have these interventions and say, hey, listen, you know what? This can't go on any longer. It's unsustainable. You got to get your act together. All right, we're no longer going to enable you. Rates are going to be going up here, like it or not. And let the politicians scramble to get it done. So anyway, that's what I'm looking at today. Keep your eyes out for the ECB decision, and good trading to all.
As always, be sure to check out the written blog at www.fxedu.com to get complete coverage of today's Forex market. If you would like to learn more about how to trade the Forex market from professionals like myself, be sure to check out our affordable Forex trading courses. And if you're already a seasoned professional or aspire to be one, ask us how we can help you achieve your Forex goals. Go to www.fxedu.com to get started today.